Kunj, hi, morning. All these upgrades coming in after the massive move that one has seen in ICICI Bank and, MSCI buying, which is now finally over. But the fact of the matter is that the stock is up 40% this year. How much further can it push in the near term?
So, one way to look at the answer to this question is to look at some other stocks from some other sectors, let's say top of the mind FMCG. Sure. And if we look at the performance of the stocks from those sectors over 2019, I remember now we are at the end of 2019, beginning 2019, there was a lot of this discussion on around that, okay, FMCG sector has had a 3-year or a 4-year outperformance. Probably 2019 will not be of FMCG. But today, at the end of 2019, we know that it was again year of FMCG as well, along with some others. So that's the point. ICICI Bank about, let's say, 12-14 months ago was at a stage wherein all the negatives news had been built into its price and valuations into its financial performance. Stock price had by then underperformed for almost 2.5 years, obviously based on various developments. And it has come out from there. So that's one part. The other part also is market. Now we are today sitting at a market wherein specifically last almost 1.5 years has been the market of developments of corporate governance issues coming in focus more and more and more and more and more. Now, as a result, for any investor, whether global or domestic, if he is cautious about these issues, the universe of investing is continuing to shrink. The groups, business groups or the companies...
So your life should be easy.
Sorry?
Your life should be very easy.
So
if the universe of investing is reducing, all you need to do is bother about 15 stocks. It's never been great for fund managers this year. What has gone higher? Reliance,
when to get out
Bank.
of those 15 is the tough question, which is what I'm asking him.
Okay, let me also now throw in the spanner or whichever way. Last 2 months, 10% Nifty rise or market rise, if we look at, none of the traditionally performing stocks have contributed to this rise. Sorry?
Reliance has
okay. Reliance is an exception.
Bank has added.
HDFC. So
ICICI Bank has added.
So
these are three
probably
stocks.
no. So let me give you some numbers. I might be here or there, and some of the stock names that I am taking are with disclosure and not investment recommendation. Sun Pharma and Cipla have roughly moved 20% in last 2 months against 10% Nifty. Reliance has been one outperformer. Auto stocks
30%.
Yes. Tata Motors, one of the underdogs. Within banking, completely different set of stocks. Yes Bank, ICICI, and SBI, the historical laggard. So that's the complete, so its life is not that easy. Last 2 months has been actually difficult. But yes, over a medium term, can it come back to being easy? Probably yes.
So what do you do at 500 plus levels at ICICI Bank?
I'm still positive. So we have not off late bought recently, but we have been holding it in some of our clients' portfolios. And if we see in
You're not taking profits anywhere?
Not right now.
It doesn't matter whether it's momentum or liquidity. If prices are going higher, NAVs will go higher. How do you invest in this market when growth is bad, economy is not recovering, flows are strong, markets are in all-time high? If you take a view on the economy, you cannot be bullish. If you take a view on the flows, you cannot be bearish.
So very good question, and that's a very big dilemma that as a fund manager, as a money manager we face, and I'm sure everybody else faces. Even if it's a retail investor, he also faces. So few things here. One, sometimes you have to take the trend as an indicator that okay, market is telling at the end of the day, there's one way of looking at the market, that price is God. Price or the market or the index levels, whatever we call them, is showing something. And if you take that as a hypothesis and then try to analyze last 3 months, the October data I haven't got, maybe has been released. July, August, September, the government expenditure has gone up. July was roughly 25% up over last year's July. August was 30% and September was 35%, both capex and opex. So probably that is indicating something. If the similar expenditure government has continued in October and November and likely few months, I think it's a matter of time that the secondary effect, the cyclical effect of that money flow will come into the economy and things will start easing out. So I don't know. Probably market is looking at that. So that's one way to look at it. The second way is smart money is always ahead. So market moves at least 6 months, maybe more, ahead of what developments we are actually able to see as analysts or as fund managers, or when actually numbers come. Still, the answer to your question now, let me come that what as an investment strategy at least I am doing or we are doing. So not that there is anything particular there, but very broadly speaking, 30-40% we are playing with trend / momentum / higher valuation, whatever we call it. About 20-25% odd contra bets, say auto ancillaries. And about 25-30% we are trying to play historically good performing stocks which have had the pressures of growth in the recent last 5-6 quarters because of the environment. But as a result, valuations are relatively cheaper, may not be cheaper on absolute basis. You have to take a medium to long term call.
I want to get some debate going on two-wheelers here. I just saw on my screen Bajaj Auto is at 3,200. It's almost a 2-year high, for Bajaj Auto. But TVS or Eicher, or for that matter Hero MotoCorp, they are nowhere close to the kind of recovery what Bajaj Auto has exhibited. Logic here is very simple. They get 1/3 of their business from exports, and globally there is a little bit of optimism which has kicked in. Also, their dependence on three-wheelers, I mean the autos which they make, is also very high. Now that's Tata Motors for you. Let's look at two-wheelers, Konica here. Only two-wheelers. Last 2-year change. TVS Motor, 52-week change, down 14%. Stretch it up to another 2 years and you'll be surprised with the kind of underperformance what we've seen. In last 52 weeks, there is a slowdown in the auto sector, but Bajaj Auto has given a 17% return. 2 years, it's flat. TVS and Hero MotoCorp and Eicher in last 2 years, even without looking at the graph, I think they would have given terrible returns. 36% lower for TVS Motor, and for Eicher, 24% lower. Who's going to answer this one, Kunal?
So before Kunal comes in, let me throw in some additional numbers. In fact, before coming to your show, I got up early at 5 o'clock. You should give me some credit to do some study to talk about all these things.
I like our reputation of ET now.
Yes.
That guests have to be so prepared.
To wake up early in the morning.
Kunal
and
never does
study
that.
before
Kunal,
the
5 o'clock in the morning.
6:30.
Robin Sharma says, get up 5 a.m. club.
5 a.m. club.
So, and coincidentally, it was not auto, but related to that, auto ancillary, more specifically tires. Now, largely a similar divergence has been there, but I'm talking of 5-year numbers. On a 5-year basis, MRF and Goodyear have given a reasonably positive returns. I'm sure you can put on the screen. I think roughly on a 5-year absolute basis, about 30-40% return.
Yeah. Apollo is incorrect.
Yeah, Apollo is negative return. So is, I guess, JK Tyre.
Okay.
And C8 is flat. So that's again a divergence to add to your OEM manufacturers' numbers. Difficult to justify. I mean, and that's what makes investing very difficult and makes it difficult to make money in the market. Otherwise, everybody would be making money and not sitting here and talking and chatting and giving gyan. Having said that, obviously some of the factors which have worked and which do work for Bajaj Auto, I think largely you explained that it is export. Also, the fact that management was very clear that at the expense of margin, at the expense of doing some discounting sales, we will focus on top line. We will focus on volumes. And I don't know about the exact number of market share, whether they have gained, but I think that is something that worked very clearly in favor of them.
Kunal?
I think the reason why I believe Bajaj Auto is one of the leaders is because it fell less in the last 1 year of price correction. I think it was only the only large cap auto stock which corrected by not more than 20-25%, and whereas rest of the other stocks like Maruti, Eicher Motors, comparing 4-wheelers, 2-wheelers, etc., I think most of them corrected by more than 45-50% as well from their 2018 peak. So I think that's one of the reasons why you're seeing a relative lower bounce into these stocks compared to Bajaj Auto on a relative basis because it fell less. Now that also brings in a case that Bajaj Auto is one of the more solid stocks. I think what Maruti did in 2008-9 was moving into a slow beta nature or low beta nature, gradual uptrends. I believe Bajaj Auto is showing similar signs of price pattern. So this tendency of not correcting significantly but participating or leading the charge from the front when the auto sector is looking for a revival, I think that's an indication that this could now be a new leader for the auto pack, and this strong or durable price performance also indicates that the stock should be gunning for a new high first as compared to many of these other relative stocks.
Okay. Some other names which are going to keep, the newsroom chatter all alive and loud. Kunj, the SBI Cards IPO, is it a clear subscribe?
I haven't looked at the numbers in detail. In fact, so before I come, and why I'm saying that and before I come to a view on that, let's look at the two other IPOs. CSB Bank closed recently. And at that point of time, let me also tell you, we keep talking of that मार्केट में रिस्क कवर्स माइंडसेट है, मार्केट में लिक्विडिटी नहीं है, नो.
Looking at the subscription numbers, you wouldn't think
400 करोड़ के आईपीओ के लिए
yeah.
4000 करोड़ रुपया आ गया. Where is the risk covers mindset and where is the lack of liquidity? Be that as it may, we are going to have Ujjivan small finance IPO.
Yeah.
Now I am not sure if that will attract the similar kind of subscription interest or oversubscription. The reason being that today anybody, whether a consumer who is buying goods or services in the market or whether an investor, he is telling me, give me a good deal, my money is here. Quality should be there and value should be there. Price, offering, valuation, whatever we call it, should be there. So while that was not exactly the case with CSB Bank, whose financials are not as great, but still maybe some the brand name of the promoters, partly the valuation got it that kind of subscription. So coming to SBI cards, frankly, I still have to look at the numbers in detail.
Sure.
But if the financial numbers are reasonably good, valuation offered is cheaper, market is desperate for opportunities to invest. So we should see that kind of investment.
Yeah, there seems to be a lot of excitement around this one for sure. On that subject, Kunal, we were chatting about the charts on SBI yesterday, and you were talking about as to how it's not ICICI Bank and only RBL, which has shot up 41% in the last 1 month, but SBI is looking very strong as a chart. What do you read in the near term for SBI?
So I think SBI is one of the leaders in the PSU banking names. That's undoubtedly because of that price performance and the way this large cap stock behaves and moves, because it tends to act as a very strong leader. So all the other stocks on the PSU banking name, whether it's Bank of Baroda, Bank of India, Canara Bank, etc., I think all these stocks have just tried to play a catch up. Some of them have managed to inch up higher, some of them have fizzled out. But I think SBI has managed to show that continuity. Now, if you look at the relative chart patterns from 370, the stock fell to 250. So now, generally as a technical level, we look at 50% of the retracement. Wherever the stock which fell by, in this case SBI fell by 120 rupees approximately, if it manages to cover the first 60 rupees, that's a 50% retracement. We call it as a very strong comeback for the stock. Now it's not even crossed that 50%, but it's gone beyond that as well, and it's almost a V-shaped recovery for a low beta stock. A V-shaped recovery and a very similar sort of a time span. I think this indicates that the stock is, or the entire trend has reversed for SBI, and it should not just break that 370 mark, but I think the market stabilizes. I think the stock could go much beyond that as well. We've seen historically how V-shaped patterns play out, and I believe SBI could be similar case.
Another stock that I want to flag off, which we've been monitoring, of course, everyone on the street monitoring, is Reliance Industries. With that market cap ever so close to the 10 lakh crore level, it clearly seems to be a new milestone. And Kunj, the fact that they are now potentially going to raise tariffs, that could help them bolster up their overall cash flow, help them become net debt, and it's going to be very positive in the long run. They've already, clocked some very interesting milestones so far. What's the story for RIL at the current PE of about 23.5 times?
So I'm not sure.
Why the smile though?
Yeah. So why I'm smiling is that because I don't have an answer to your question, and why I'm saying that is that it's very difficult to take an actual fundamental plus valuation oriented calls on such kind of stocks or on this stock or Reliance. So I'm saying that is, I'll tell you. And before I tell any further, let me also highlight here that if we leave aside last 2.5 years or so of Reliance stock performance, there was a 9-year of underperformance by Reliance stock. Let's not forget that.
Exactly.
Let's not forget that.
Sleeping giant.
Yes, exactly. So that's where we are today. Now today you are right that one of the factor which seems to have worked and is working for is the tariff rise. Largely a collective decision. Hopefully it gets implemented by all the 3 left players in the telecom industry and it gets implemented. If that happens, there are chances that the sector may also get regulatory / judicial / government support, which has been missing. So this was an unfortunate sector which had hammering from all the sides. It had hammering of regulatory, it had hammering of government. It unfortunately had hammering from the judicial side, which generally other sectors don't get it. And along with that, let's also keep in mind that the announcements made by Reliance from its AGM till subsequently of value exploration by either demerging or restructuring its other new generation businesses have also contributed somewhere.
Okay, but we have some more interesting factors that we want you to chew upon, Kunj. Let's talk about the kind of signals that we've been getting from the FII community, and Nikunj is here on Morning Masala with more interesting perspective.
Bull markets always climb the wall of worry, and that is what I think has happened in last 3 months. At a time when the economy is going through a cyclical, deep-rooted slowdown, foreign institutional investors are back, and let's look at this data. Big sell figure in the month of August, but from September onwards, the climb has been strong and steady. In the month of November, 22,000 crore, couple of days are still left. October, 14,000 crore, September, 6,000 crore, which means in last 3 months, the total foreign institutional investment in India has been north of almost 35,000 crore. Why is there so much of robust commitment from foreign institutional investors? Well, that's largely because you got very unique situations in the market. Couple of promoter blocks, stocks like Yes Bank have also seen a lot of inflows, and some old-time investors of foreign in SBI Life, they've also decided to exit. So here's a sum total of some large deals which have happened where foreign institutional investors have been pouring in a lot of dollars. SBI Life, Yes Bank, and then one more deal in Yes Bank. We'll flip it around just to establish that where were the buyers and the sellers, both in Yes Bank and also in Z. Remember, Z now, after HDFC Bank, is one of the highest FI owned Nifty 50 companies. So this uniqueness which the Z promoter, the problem the Z promoters got into, that offered a great entry point for long-term institutional investor who understand the true value of Z Entertainment and Z Enterprise. Another interesting trend which just establishes that how strong the confidence is look at the IPO market. SBI Card has filed for an IPO, but focus on the size here, 9,600 crore. Which are the issues, or which have been the large issues which have been north of 10,000 crore, roughly $1.5 billion in last 10 years? Well, it's Coal India, the famous IPO 8-9 years ago, Reliance Power in 2008, GIC and ONGC, these were government disinvestment issues which in a sense got a lot of response from LIC and other banks. These were forced disinvestment proceeds, but SBI cards is something which is not forced. But if SBI feels confident of raising 9,600 crore in this kind of a market, for sure it tells you that the institutional appetite and the FI appetite for large unique issues is back. So it's not pouring. I think it's raining dollars as far as Indian markets are concerned.
Indeed it is. Thanks very much for giving us that perspective as to what exactly the trends are indicating when it comes to the fund flows. But let's also get you a wrap of the top headlines then. And the Blackstone Group, KKR and Apex Partners, as well as Advent and Bain, they're among the leading global private equity companies engaged in early discussions to acquire Granules India, one of the largest contract research and manufacturing companies in the country. The stock is going to be on fire. And SEBI will make it easier for unlisted companies looking to raise funds by selling debt securities on the stock exchange platform. The focus is on companies that have not listed their shares but want to list only their debt instruments, according to the ET reports. And private equity firms Apollo Capital and Cerberus are competing with the Adanis for stake in DHFL as they work out the revival package for the first financial company to be taken into bankruptcy administration. The RBI has decided to refer the stressed home financier to the NCLT. And here's a look at the news in pictures.
Okay, roughly around 2.5 minutes left to go before we kickstart trade for today. Let's take it across to our chartists, find out what's top on their trading list. CK, what's your top trade for the day?
Well, I would be buying an RBL Bank. I think that's a stock with some news, and in this market, news provides the momentum. And it's very essential that the stock has some momentum so that it can continue and show us some amount of move. On the charts, RBL has clearly shown an upside breakout from recent congestion zones. So I would be a buyer at the current levels looking for a target 380 or thereabouts. Will maintain about 5 to 7 rupees stop loss.
Okay, Kunal, your top idea?
It'll be a buy on Bharat Forge. I believe that stock is heading towards a strong breakout. It's already given that confirmation yesterday. So any more continuation up move for Bharat Forge would lead to almost a 6 to 7% upside from current levels. Buy with a target of 500. Stop loss at 455.
Kunj, if I have to put a flash saying Kunj Bansal's top idea, fill in the blank.
Okay, so we have been discussing about the market, the indices being at the life high, so much of uncertainties, corporate governance-oriented news flows, valuations. So what does one do? I think in this kind of market, if one gets reasonably safer stocks with decent growth rates, maybe valuation slightly high, corporate governance taken care, relatively lower expectation of 15-20% annualized return rates over the next 1, 2, 3 years, one should be very happy with that. And in my view, in all these criteria, insurance sector, despite its outperformance, despite, as I said, its valuations probably not being as comfortable, it still fits in. So we are actually buyers in our client portfolio at current levels of HDFC Life in life insurance and ICICI Lombard in general insurance. So those are the ideas.
50 seconds to go, and what are we working with? Well, it's turning out to be a good purple patch for Indian markets. Like I said, markets always climb the wall of worry. And that's what at least benchmark indices have exhibited. The most notable feature of this month's price action has been that we've got a marked improvement in market breadth. Risk is where you have seen a comeback, whether it's in form of Yes Bank or in form of Z, maybe a combination of some metals and some of the PSU stocks. For weeks, market players and market participants have been calling for some sort of pullback. And for some folks who've been sitting on the sidelines, thinking, assuming that, look, we made up our mind and we want to put our ring in the hat, so to speak, I think they are feeling left out. And the challenge with this kind of an one-way trend is that markets are not correcting, and it may just force you to step in when the market levels are slightly extended or overheated. But 10 seconds, markets are open, and I'll throw it to Awa.
All right, let's find out what the expiry trades are indicating for our markets this morning. Well, take a look at the index. We've got off to a rollicking start at 12,136. The Nifty Bank is holding out. The Sensex in control. Pull up other indices like the banks, what's going on with IT, metals, because remember yesterday it was support coming in from all quarters. Now to individual stocks, then Z Entertainment. Remember, the directors have resigned. They've cited a lot of related party deals. Looks like the stock is seeing a measured response to that, just down 0.33%. RBL Bank, it's the fundraiser they're going to be discussing. How's the stock reacting prior to that? Up at 369. SBI, we're looking at the big SBI Cards IPO as well, and the stock is currently quoting at 346. Reliance Industries as well, as we're closely tracking now 5.7 rupees away from that 10 lakh crore market cap. I reckon it could even happen in trade today. You've got IIFL Securities as well. Abacus has bought shares into the counter. Let's quickly check in as to how that stock is shaping up. I want to also quickly flag off ICICI Bank. Remember, there's been a lot of interest. Brokerages across the board have been flagging this one off as a potential outperformer. 509 there. Cipla, the unit is packed with City Health Imports. You've got JSW, which has delayed their plans for the cement IPO by nearly a year. You've also got the telecom stocks. Remember, the TRAI has said no floor price for the telecom tariffs. Just a quick look as to how those stocks are reacting in today's trading session, and something like Lemon Tree on the back of bulk deals. But for now, it's a healthy market at hand, and you've got a very positive market breadth too. Clearly, there's a lot of leadership coming in from the large caps and the Nifty Bank.
Honestly, pick up the last half an hour of trade and then extend it with what's happening today, which is these, okay, State Bank of India in a leadership position, Yes Bank touching 70, ICICI Bank looking okay, and India Bulls has regained some momentum. So what we are seeing is an extension of the last half an hour of trade, and this again is on expected lines. But Reliance nearing 10 lakh crore. How many companies in the world today are at 10 lakh crore? We'll get that data out, but it just makes you feel very happy and proud that one Indian company today is valued at almost 10 lakh crore. I mean, when I say almost, it's almost there now. 10 lakh crore. That makes Mukesh Ambani the richest man not only in India, but also in Asia now. I mean, his net worth now, according to the latest numbers, Aisha, should be nearing $55 to $56 billion. And second is Mr. Azim Premji, who's at $20 to $23 billion. So the gap between the richest man and the second richest man, I think, is just going to disproportionately higher.
Oh yeah, it sure is, as Reliance counts down to that 10 lakh crore rupee market cap. Idea, Yes Bank, these are stories which continue to hold higher, and we were just chatting about that little bit of traction in pharmaceuticals. Today you've got Cipla, which is holding out. Biocon, after that big US FDA nod, was a big mover yesterday. Let's see whether there's a follow through coming in today. Today it's a lot more tempered at 276 thereabout. Kunj, we haven't discussed Yes Bank. What do you do with this one? They're all set for that mega fundraising. About $1.2 billion is the sum being talked about.
Yeah, so, something should come out now. It's high time, because we have had the names of all the Toms and Sundries and Dick and Harry and all those, but nothing has come till now, which is unfortunate. So it should not become a story of bhediya aaya or share aaya, bhediya aaya, share aaya, because then market really gets disappointed. Market has given you benefit of doubt, has brought you up from 25, 30 to almost 70 rupees today. Now, if you don't help the market by giving some concrete development, market will bring you back also equally well. So let's see. But coming to the answer to your question, if we get some concrete names, some actual action on money coming in, I think somewhere around the current levels will become a floor price. From here to go up, will continue to need developments and announcements in terms of next 1, 2, 3, 4 quarters financial numbers, some improvement in the business, some reduction in the divergence with the RBI's audit, NPA control and all those things. But the basic requirement is that capital should come in, some strong name should come in.
Sure. Okay, Kunj, great to have you in the
Thank
studio
you.
with us. Thank you so much. Holding out just about flat right now, 12,100 plus for the Nifty futures. The breath, of course, has started off on a positive note. It's not a huge margin, not anywhere close to where we were yesterday, but it's favoring the advances as of now.